What's going on, everybody? My name is Lamont. I've been a full-time trader for 7 years now and part of the Chart Guys team for more than half of that time, where I head up our futures room and our swing report. In this video, going to hit you with some trade zones covering our hype sectors and our overall markets. And that's pretty much it. So without further ado, let us get into it. All right, so we'll start off with NVDA. So NVDA, we were potentially looking at this as a bit of a blow off top here, but you have to call for what it is. That's not really what happens when you have a blow off top. This candle was a very typical start for a blow off top, but as Dan would say, pretty much just a sucker punch at this moment right now, because the sellers really haven't built on that at all. So normally you see a big blow off top candle like that, you'll see follow through. Like that's kind of like what an island reversal is, where you'll have this blow off top kind of a situation, one more go at it, and then you gap down, and then that's the island reversal, right? Whatever, just classic, candlestick pattern stuff. So that's not what happened here. And the breakout point is 823.94. So as long as these sellers cannot get priced back under 823.94, then the change of this breakout, including this gap, has not yet been negated. And then the buyers are very comfortable. So 823.94 and 791.91 are absolutely the key in the short term. Bigger picture trade zone, if you want to be kind of conservative, I guess, something like this is pretty reasonable, and you're just trying to get back here. This is probably for like a weekly higher low kind of a deal. Something like that, like if you let it come in. Again, conservative trade zone, right? This is a swing report kind of a deal. Because if you hold these two high volume areas, they're gonna test this high volume. Like that's the only thing that can happen. Whether or not they successfully do so, we have no idea. Whether or not they even come into here, we have no idea. But we know that if you hold this area, they should try to get to new highs. And if they have to get to new highs, then they should try to test here first. If you can't hold here, but you do hold here and you can get back over here, it's the same deal. So I would say this is a pretty reasonable trade zone for a potential aggressive weekly higher low, because it would be a higher low that's way over the next area of key demand. But I mean, the overall market so far has been very resilient. So of course that can change, and we'll cover some of the red flags in the overall market in a bit here. But as of now, pretty reasonable to look for a setup like this. So we shall see. I think that would probably put you right around 50 RSI as well. And if this trend is going to stay nice and healthy, then they'll hold the 50 RSI line. All right. So that is pretty much it for NVDA. So SMCI does not look as good as NVDA, right? You close the day out. I mean, they close the week out with a pretty high volume selling candle. But that being said, similar deal where if as long as you're holding over 1003.54, this breakout point, the buyers are totally comfortable because we're still just moving sideways and higher. Additionally, tons of volume traded at 860.25, and then at 736.86 for some reason. I don't know if that's an error or what, but apparently there was a lot of volume traded there. So I'm thinking pretty similar situation. You might even want to be like a little bit more conservative and look for a fill like under this low as well, right? Look for a potential lower low that lacks follow through. So something like this. And it's a similar deal, right? Because if we're going to balance here, but not come all the way back down here and stay relatively strong, then ideally these buyers will maintain over this low over here, because this was as far as this very serious amount of selling could take it, right? This was, I forget, like 20, 30, 35% off of the highs. So essentially that was the last go that sellers had, right? And so think about it, right? If they were to go and break this low again, right, that would mean that the sellers are trying to build on what they try to get done here. And if you don't see follow through on a break of that, what's probably going to happen? You'll probably see a bit of a snapback to at least this high volume area. So a bit of a conservative trade zone such as this. And I'm not saying just blindly scale. I never mean that, right? This is the framework for a trade, And so if you ask me, okay, well, how do we use that? Like a pretty ideal, straightforward kind of a situation would be like if you just look for a level, a key level that breaks, that does not have follow through, and then you essentially fade that move once it gets back going the other way. So you'll see this kind of a setup, and if you're part of our Slack group, then you've seen me do this trade tons of times. It's one of my favorite trades. Essentially, you're looking for an area of change. And then if there's no follow through on that area of change, what is that? The market is telling you we don't agree with this change right now. So if that's the case, then it should try to go back to the next key area that would suggest change. So basically, like let's say that you honestly like that. You move down, this is the area of change, right? Because they have to find, the sellers have to find acceptance back under this high in order to negate this change. And so if they don't do that and then you come back out, you should expect the highs of the range that they just fell from to be tested. Let me just like, pull up NEO charts and see what exactly I'm talking about, right? So hang on a second. So for example, you can use this point of control or the value area high as a really good indication for a potential area of change, right? And so because you come into it on this day, there's no acceptance, the move over it is a very reasonable buy. If you're step under the low, target the highs of the local range. You can do it. It works time and time again. It's going to work time and time again because that's just how the market has to work. It's trying to let us know where the change should occur, right? Well, it's already told us, I should say, where a change should occur. And I like to do this at points of control, right? So you move down under the point of control, no acceptance. Okay, you buy that move, third stop under the low, try to get to the value area high first. That works for you again here. That works for you again here. That works for you again the other way here. That works for you fine over here. Is it always going to be perfect? No. Will there be times where you need to take, one or two attempts at it? Yeah, right? But it's a very straightforward way to take trade. Okay. So anyway, that's what I would be looking at for SMCI if you don't want to scale into, a trade that has all this range on it. But, to be fair, it's still like a 3R trade, right? And it's a reasonable trade. So then the idea would be something like this, right? Ideally, you come down here, crack this point of control, no follow through, move back over it, buy that move back over it, throw a step under the low, try to chop it up here, and then see what the market will give you. So anyway, that's pretty much it for SMCI. Lots of space for a weekly higher low if we do begin retracement from here. Anything over 692.50 will be good for one. And again, those key levels are 860.25 and 1003.54. Moving on to Bitcoin. So Bitcoin's pretty much just potentially is doing exactly what I was just talking about. So here's another example of that, right? You move down into the value area high of this key structure over here. That's this guy. This guy is obviously important because it was the first step down after this all-time high balance, right? And so we've come back over here and you can see that I told you it was important on these two sessions being problematic. If you zoom in, I believe there's some more detail on it. Yes, so you can see how significant this point of control of this structure is here. And so the back test of it, especially because the severity of the drop was pretty serious. And so knowing that the short-term sellers are extended and they're back testing a very key level of change, which already told you is important in the past, the move back over it, you buy that move back over it, third step under this low, try to get back to here because that's where they fell out of. And if they're not going to come through here, they're going to try to go back to where they just came from. Whether or not they succeed, no idea. But that's how the market has to work. And that one piece of information alone is enough to set up trade. That's really all you need. So anyway, just some food for thought. Think about it. Sets you up here like this as well. Same setup. We talked about this in the crypto room if you're part of our Slack community. Links in the description below. And I guess if you wouldn't mind hitting us with a like and subscribe. If you got something out of this or if you get something out of this later, very much appreciated. Even here, right? Like they're very good levels to play off of. So you just break down under this point of control, no follow through. You buy that move back over it, try to get here first. Stop is under there. Even if you could chop it up right now and you'd be more than risk free, right? Because your stop is only less than a point away, about a half a point. So anyway, that's the secret sauce, take it, use it. I promise you, it's a very good methodology. So anyway, if these buyers can maintain over 65208.85, then they'll be totally confident because this structure from 2021, from November 2021, is the balance that was sitting on top of all the prior price action until recently. And so holding over it would just mean that the higher prices are relative to that structure, the all-time high structure, are being accepted. So the more acceptance we find over 65208.85, the more confident buyers will be. All right, so that being said, you do want to watch this guy, right? This little hourly structure is the key supply now, right? Because this is now the new structure sitting on top of all-time high. And as long as this is resistant, then the buyers aren't going to break to new highs, right? That's just a fact, which is exactly why the sellers take a stand here at the point of control of this structure right under it. Which is pretty much the lows of it. So anyway, I guess for conservative trade zone, I guess you could come like all the way back down here, and this would probably be for weekly higher low at this point. So right. So you probably don't want price to come back into this major guy here. So very conservative trade zone might be like that. So you're using this structure, you're using the backtest of this guy, and you're really just looking to get back here. So again, it's obviously a lot of risk, but this is just a framework for your trade. And you can be, if you're a more active trader, you can be taking those lower term setups, like lower time frame setups, and then if they work, great, right? And if the runner keeps on running, excellent. And if not, if it was a low risk setup, you probably got risk free pretty soon, etc. So take this information, apply it to whatever methodology you like, but the key is these areas of supply and demand. They really are the cheapest place to find out whether or not a trade idea will work, whether or not a trend will continue. It's always going to be off of prior area of supply or demand. All right, so that's pretty much it for Bitcoins. Space for a daily lower high now under 73835.57. And that's it. So Ethereum also pulling back and did not make a new high. So I'm looking at this guy. Really, we could mark up this whole structure if we wanted to and use it as one reference. But I just broke it up because why not? A little bit more detail. And so now we're back testing this structure from 2021 as well. And this is also the daily breakout point, right? The last major area of daily balance, these 5 days or so. So a pretty key spot here, test of 3521.99. Why do we have this guy marked up? This guy's from all the way back here, right? So I like this guy because it made these lows of the balance that's sitting at all-time high, and then it also made this major lower high, right? That sent prices lower for many, many years. So the way that I see it is all of this price action, right, under this guy, so that's all of this, pretty much dictated by this guy. So the best case scenario for these buyers here is to maintain over this structure, key level 3598.66. You pop over 3598.66 and you can find it, and if you can find acceptance over 3632.48, should be another test of this guy right here. They should be trying to come right back to 3853.84, 401, 7.56. Okay, so this is still the more conservative trade zone. This is where like that major area of sideways is here. 2 steps that were built on the way up. It would cover this major point of control back test of this guy over here, which is what made the lows here and here and here. So I still think this is probably the most reasonable one for like more conservative swing trader types. If you're like waiting for some further extension, that would probably get daily oversold. That would be daily oversold. So I'm going to stick with that for a bit more like conservative approach. I would say that the NVDA and the Bitcoin, all of these other setups are definitely a bit more aggressive than the Ethereum one, but I just like this based on the, you know, the structural look of it. Yeah, especially NVDA, SMCI, these are way more aggressive. Anyway, for CCJ, all right, so CCJ came into our trade zone again after dipping into it here. Actually, I forget when it was shared. I think this may have been the first time. So this is, again, another example of that pass back overplay, right? It's not at the point of control this time, though. It's at this prior high, 39.77. Why do we care about 39.77? 39.77 is pretty much the highs of this structure, a pretty good proxy for the point of control of 38.87, which is the point of control of this guy here. Now, the best case scenario for these buyers would be to stay over 38.87 bigger picture, because that would suggest then that the higher prices relative to this major supply, which is the all-time high supply right now, if you continue to find acceptance over it, what does that tell you? Right? The market thinks that higher prices relative to the prior area of supply that marked the all-time high are fair high, right? Fair price, what is fair prices are high relative to that structure as long as we're over 38.87. So if you initiate it on using this trade zone or whatnot, ideally like a very active trader, you're looking at a failure under 39.77. You're looking at a failure to touch down to this major point of control, right? That's a very notable failure on the seller's part as of right now. And so you can buy this move back over 39.77, 30 stop under the low. It's the same exact concept. You know, it takes some time to get used to it because, like, you know, like a lot of folks like to come in, like time the bottom so they don't, people don't often, some folks, right, don't like, it's obviously up to your style, but some folks don't like buying the momentum, right, once it gets going. But statistically, I think you'll find that you have an easier go at it, being on the right side of the V. So anyway, it's also then you have the stop level. It's much clearer, right? I think it's honestly much. I find it much easier. So anyway, as long as these buyers are holding over 38.87, it's the opposite that we were talking about here with the value area high, right? The idea was as long as they're holding over 42.31, they should be trying to come here, right? As long as they're holding over 38.87, they should be trying to come here, which is more or less true for everything that's happened here. If you move above the value area high, it should be right back to looking for this guy. So I think this is honestly defensively these buyers look okay. If they continue to prevent the sellers from touching down to 38.87, that will be very notable. And again, this is potentially so, you technically have a weekly lower high and lower low, but it's right into this area of demand right here. And so if you don't see acceptance, especially if you don't find acceptance under 38.87, it's right back to looking at all-time highs again. This is potentially a monthly high or low set, right? Weekly lower high, lower low. If there really is no follow through on that weekly lower high and lower low next week, you're probably looking at a monthly high or low being set. So we shall see. In the short term, got to get over 45.28 to negate the change of this breakdown. All right, so this is just a defensive victory right now, right? The buyers, they have to get back over here to even get back into potentially being constructive. This is all still defensive work until they can get back over 45.28. All right. So that is pretty much it for CCJ. Moving on to TAN. So TAN came into our trade zone, hit our lower target, right? This is just because the value, again, if we're over the point of control, we should expect the value area high to be targeted as the target, right? If we're under it, expect the point of control. So now that we're back under it, these sellers should be trying to come back to 39.98. This is why the trade zone offers a little bit of wiggle room under this major structure's point of control, and then we're just kind of using this high here within this big guy as another reference, as our low end reference, right? And so the idea is it's not very often you won't get a perfect hold, right? Just like here, you get a little break with no follow through before they try to rally, a little break with no follow through before they push lower. There is a failure, but if we look back here, let's see, right? There's a break with no follow through, and I wouldn't be surprised if we look to the left here that there is a high that wasn't violated. I'm not sure, but here, let's see. Right? You see what I'm saying? So this structure was right above the point of control. So over here, when it pops with no follow through, it fails under there. So we're using that same exact principle with this high of this structure. So we're looking for potential play from the other side now with a break with no follow through. It's already been reactive in the past, this level. So if it does come down here, but it doesn't get through 38 or 80, we should still be open to this idea. Additionally, again, if you move under this point of control with no follow through, pop back above it, you can fade that. Throw your stop under the low, target here. Okay, so that's pretty much it for 10, space for a daily lower high under 47.56. And this is really just balance, like there's a reason why we're bottom fishing down here and chopping it up here, because as long as we are under this area of supply, but over, I guess, just really this major point of control, which we should just expect more of this. You know what I mean? Like that's just how it works, right? It's either balancing or trending, and obviously that's relative, but on this chart, on the daily time frame, we're balancing. So that is pretty much it for 10. MSOs. So MSOs, man, they are really battling for it here, right? So acceptance under here would have been a really bad look. And so if you'll notice what happened is essentially you get a daily lower high, lower low, and where do they get caught up is pretty much here. Right? So this guy, this structure here, which made for these highs here, right, is now pretty much turned into support. So if these buyers can now find it next week, can find acceptance back over 9.37. This was a stop out, by the way. This was a chop and stop, right, for the shared idea, right? So it came into our trade zone, bounced to just under where the buyers had to get to, and then you stop out the rest, no problemo. But in the short term, we'll make an adjustment here to this as well. So anyway, my point though is all of this that we said previously is right back into play now, right? The buyers want to find acceptance back over 9.37. Acceptance over 9.37 opens up price action like this. And so acceptance over $8 is step number 1. So this was actually quite notable. Unfortunately, I wasn't paying attention I was streaming on Friday. So this was a very notable setup, right? Because it's a gap situation and they missed the back test of the major point of control. This was a situation where buying the pass back over the open is very reasonable, because the first goal for the sellers, if the buyers gap up, is to fill the gap. If you can't fill the gap and you roll back over the open, that should be the go sign for the buyers. Will the buyers always press from there? We have no idea, but that's where you place your bet. That's the latest place where you place your bet if you're going with the day plus buyers, the buyers who are playing beyond the day time frame. Okay, so anyway, eyes on 9.37, space for a daily higher low to next week 7.30. At this point now, I think you can do something like that. Let me just adjust this trade zone. At this point now, I think you can do something like this, pretty reasonable, right? Basically, no acceptance back under this guy. Right, hang on a second here. As long as no acceptance back under this guy, give it a little bit of wiggle room. And honestly, I think you should be looking to come back up here. So this would be essentially for a daily higher low if you get it. I kind of doubt it. Like if this move is going to get going from here, I kind of doubt it pulls back here. So the conservative trade zone is what it is. They are conservative. You know, if it doesn't come in, it doesn't come in. I think more likely if this move is going to get going from here, you know, you're probably looking for like, ideally you'll get something like this, right? Pop back above, rejection from here, move under 9.37, no follow through, and then that is probably good for the higher low. So let's see how it shakes out. Again, these are conservative trade zones, and I'm pretty much always going to set them to be conservative and a pullback play because I want them to be as easy as possible, right? The goal here is not to maximize. The goal here is to learn, right, and to just see how to set up trades, how to pick location. Really is I guess the primary idea. How to pick location and how to exit. Well, the exits are really more for the subscribers, who again get live updates for all the trade ideas, and for especially for the ones that we live trade, which you know is pretty regular. So again, if you're interested, description in the link below, or if you're interested in our community, check us out. I think we're doing free trials. No, I think we're done with that. Sorry. Anyways, that's pretty much it for MSOs. On the weekly time frame, you had a rinky-dink lower high and lower low with no fall. So this is potentially a monthly higher low being set here, right? This kind of has a basing look to it. This is very interesting. You know, you got the VP talking about encouraging the DEA to reschedule and stuff. So a lot of hype, a lot of attention around this space still. So keep an eye on it. All right, now we get into our boring overall market coverage. So for SPY here, here's a daily no change level 51013. They did trade under it for the majority of the Friday session. And so, like I said, there are some red flags that are starting to appear, right? First of all, this was the first time that you had an area of balance, the prior high of an area of balance, get backtested, right? And so that, I mean, ever since this move up, so ever since this October low, that was the first time it happened. Now, this was the second time it happened, and they made far more ground back into this area of demand. Then they held it again here, and now you pretty much close right at it. So, bit of a red flag. This is probably the most overlap in daily balance. It is the most overlap that we've seen in two areas of daily balance in quite some time. So, very key test of 507.81 next week. The more acceptance that these sellers can find under 507.81, the more likely they are to, mean business here, right? Because now they will be leaving behind supply. That hasn't happened in a long time. The sellers have not created supply by balancing and then breaking down under it and rejecting from a back test of it in a long time. So if they can do that, that is, the go sign for bigger picture sellers. All right, so we'll be looking for something like this next week in SPY. So conservative trade zone, you still got to go with the buy because bigger picture, weekly consolidation is underway, but it's still really healthy. So you kind of just still have to go with, I think, the buys, right? Because it could very easily be a healthy retracement. So something like this, let me just make an adjustment here. So this one already came into our trade zone and hit the target. So if we just move this down to like somewhere like this, maybe into here, something like that, I would say is pretty reasonable for a bit of a conservative trade zone. Space for a daily lower high now under 517.38. Anything under that's going to be good for one. Weekly time frame, again, space for a higher low. Anything over 466.43 going to be good for one. So moving on to the Qs here. And so this is probably one of the bigger red flags. The QQQ is now under this daily demand, well, prior daily demand zone. This area here is what tried to hold price here. It tries to hold price here. And you can clearly see it's a battle for it. And the high of Friday made right off the value area high of this structure. So as long as we're finding acceptance under this 222 to 29 structure, these sellers should be trying to come back down here where the majority of volume was traded recently, 428.31, 425.45. So, bigger picture, I think you still have to go with the buyers, right? Because again, there's so much space for a weekly higher low. Well, not really. There is space for a weekly higher low over 421.63, but not that much space. Lots of space for a monthly higher low. So I would say at this point now for the NQ, both sells and buys are pretty reasonable. You're probably, for the buys, are probably like more of a bigger picture look, so you probably want to do something like this. Right, as long as we don't come under here, then we're probably looking at balance like this, something like this, I would say. Right, so you start your initiations, or you're thinking about taking trade over here, high volume, and if we get too deep into this guy, then probably not. And if you do hold this guy, then they probably try to come back here. So a bit of a conservative, bigger picture one. And then if you're an aggressive seller or you're looking to hedge some of your holdings now, this is a pretty reasonable time to start looking for it. Take some low risk shots for a potential daily lower high. So a seller is looking for a back test of this area. You probably don't want to get over this high volume node, right? And I would watch semis too, right? Like you want to watch these semis pretty closely because again, if these semis stay strong, then the tech sector is probably just going to see some rotation. Something like this is pretty reasonable if you're looking to hedge your bets in the tech sector. All right. So that's pretty much it for the Qs. Again, that space for a lower high under 444.02. The key reference lower is 425.45. If they can trade under that, that would be a pretty big statement. Should have them trying to get here next. All right. So the Dow is also kind of looking shaky here, right? Again, this is the most meaningful backtest of a prior area of demand ever since the October low as well, or the November low for the Dow. Up, let me start over here. Up, sideways, up, sideways, up, sideways, up, sideways, up, and this is the first time a backtest of prior sideways, right? And now these are the backtests. So the last time we saw a backtest of a prior daily breakout zone, it looked like that, and now it looks like this, right? So this is much more overlapping, right? These two structures are much more overlapping than these two structures were, and these two were much more overlapping than these two. You see what I'm saying? Right? So it's just, a good way of evaluating the strength of the trend. So 386.72 is that key structure here. I don't really love buys here unless they're off of this guy down here, right? I kind of feel like if you're going to fall under here, then they should try to test this. And bigger picture, they should be fine as long as you hold over this guy. So something like this, I think, is pretty reasonable. Give it a little bit of wiggle room. Maybe that's too much wiggle room, something like that. So again, the buyers, I think it's starting to favor like looking for more bigger picture setups and not like chasing the momentum anymore. So maybe something like this. I'd probably come back here, like to these prior lows, something like that for bigger picture buys. And then again, if you're looking to hedge your bets, I would be patient on the Dow. Actually, I would prefer to see acceptance under here, just like the QQQ, is now under this point of control of this local demand zone. I would prefer to see that in the Dow before looking for a hedge. So that would be something like this, like a breakdown, the follow through. Look for a back test play here. Stop is no later than the record high, and you're trying to come back here. All right. Okay, so for IWM here, IWM also came into this prior trade zone and then got to the target. So at this point now for IWM, honestly, I think you could run the same exact thing. You probably want to make it like this, actually, right? Include this where the volume tapers off. Include this guy. Maybe come down. Hang on a second here. Yeah, something like this I think is pretty reasonable, right? The idea is, okay, maybe we just continue to stay balancing like this. And that would be the case as long as this structure is supportive. This little guy of demand is obviously what held price over here. It looks like it's a perfect backtest. Nearly, right? And so as long as they don't trade through this guy, then they're fine. And so bottom fishing where the volume tapers off all the way down into this structure potentially holding, very reasonable for IWM. That's a bigger picture look. Now, again, if you're looking to hedge your bets, I think pretty reasonable for the small caps, right? Like this is a good, daily downtrend, lower high and lower low. Obviously, this structure from 2021 is acting as problematic right now for the buyers. It was what held price here, what held price here, what held price here, right? Throughout all of this major balance, it flipped into resistance throughout all of this, and now it's another battle for it. So pretty reasonable to be looking for potential hedges here, but you are just looking for a weekly higher low right now. Anything over 190.06 make good for one. So we shall see. I don't hate it. I don't hate it. So if you're looking for a hedge, you'd be like something like that. Hedge or just a sell. Maybe you're just an aggressive seller. It doesn't have to be a hedge. Something like this, I think, makes a lot of sense. All right, just pretty much top fishing off of this guy, top fishing off of this guy, trying to come back down here. All right, so bigger picture buyers, I think you want to be patient down here. In the near term, if you're looking for an aggressive seller or you're just hedging your bets, I think over here makes a lot of sense. All right, so the dollar, I just ruined that. The dollar's very interesting here, right? Because so you build bigger picture. It's all about this guy and this guy, right? These two structures have contained all of this price action, you know, and so now the buyers fail to get back up to the key area of supply, which is good for asset buyers, right? This is, you know, obviously not good for dollar buyers, but good for asset buyers. And now you're just pretty much playing ping pong between these two steps that are made on the way up. So it's very clear here, right? If you break down under this structure, 102.145 being that key point of control, it's right back to eyeing this guy. 100.480. If you find acceptance over 103.135, then it's right back to eyeing this guy, 104.745 being that key level. So the dollar is pretty much a no man's land, pretty smack dab in the middle of all of this range that's been trading through for over a year now. So ideally, what the asset buyers would prefer to see is lower lows. Now, this is a pretty strong day, so I would not be surprised if the dollar did see strength in the next week, right? It's anyone's guess. We do not know. We can't make predictions based off of it. We shouldn't. We can, but we shouldn't make predictions based off of any of this. It's just no man's land. Acceptance over here, bad for asset buyers, but not the end of the world. Acceptance under here, better for asset buyers. Okay, so that's pretty much it for the dollar. And then finally the VIX here. So the VIX still having problems getting back over 15.44, this prior low here. You know, it's really anybody's guess, honestly. You just don't know, right? Because what ideally the way that we'll look for clues in the VIX is when it does things irregularly. Like if the SPY is going up and there's a lot of bets going on the VIX, that is probably people hedging, right? That's fear entering the market before before any like serious selling comes in, right? People are getting a little antsy or whatever. So as of yet, I don't really see anything meaningful to talk about just on the VIX until we find acceptance over 15.44, which would basically tell us that the volatility is now elevated relative to anything that we've seen since essentially the October low. That's pretty much it, right? I think that's the best way of looking at the VIX. And I personally would welcome a big old weekly spike because I really would be interested in that Tom DeMark setup. Right, it's such a banger here at least. All right, so that is it. Appreciate you tuning in. Thank you for sharing some of your time and energy with me. If you got anything from that and you made it this long, please consider giving us a like and subscribe. And if you want to get these alerts, ideas, regular trade ideas pushed to your mailbox from me and the team, including Dan the Man, then check out the Swing Report, check out our Slack community if you are looking for a group of traders who are just grinding every single day, day in and day out. Otherwise, I appreciate you, and I will see you all soon. Farewell.